Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 8th of February. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
Finally back in the land of living. Back as improved after many visits to the chiropractor. I'm getting old. I'm not getting old. I am old. But I've finally shaken this god-awful cold as well.
Yeah,
I think we all sound better. Kev, you sound better. Charles, you were a little bit under the weather last week, I think.
Yeah. I mean, it's still raining every day, just constantly. To the point where, you put your coat on and it's still soaking wet, you know? And
I was going to go for a walk this morning and I looked out and thought, man, I'm not even going to walk the dogs this morning. Like, it is that wet.
Well, some of them don't even want to go outside. It's that bad. Yeah. Did you see, speaking of age, you see Top Gear, the Grand Tour, they decided to replace them, because they're all old, with new presenters. And I can't believe Amazon are paying for the same expensive mistake that the BBC did, just in a row.
Yeah. But, have you seen who they brought on though? Is it that Francois Bourgie or whatever it's called?
Oh,
he's
no,
a train spotter guy. Yeah.
Some of the YouTube stuff. I just sort of this is the thing. It's really frustrating. So the chemistry of the original three, Clarkson, May, Hammond, is what made it work. People who didn't really care that much about cars, which includes me, could enjoy the show because of the chemistry.
Yeah. It was about top banter, wasn't it, with the lads, really?
Yeah.
Kev, see you're eating. What have you been doing this week? How's your week been thus far?
Just been trying to recover, to be honest. I'm just eating a cashew nut right now. I've just been very tired. Very tired after sort of working through when I had a cold, which, because we are self-employed, we have to carry on. But yeah, I'm just prepping now and got my stuff sorted out for South Africa. I'm going down to Indaba on tomorrow night. Well, as you listen to this, I will be in Indaba or in Cape Town. Yeah, so I'm looking forward to it. I'm doing a presentation on the Wednesday, or 10 companies, I should say, are doing the presentation, and I'm hosting it. So yeah, there'll be a bit of feedback on that, hopefully, maybe next week.
Good.
We'll give you the idea of that. And I'm looking forward to meeting a lot of people. There's a lot of people going down to Indaba, more people going down to Indaba than normal. And that tells me the market is buzzing in terms of resources, in terms of just in general. Yeah. And Africa is doing business.
Yeah, absolutely. All right, well, let's have a look at some of the news stories that have dominated the headlines. I mean, Keir Starmer's leadership is under intense scrutiny, not just because he appointed Lord Mandelson as UK ambassador to the US, despite knowing of his ties to convicted sex offender Jeffrey Epstein, but also because documents released as part of the Epstein files allege Mandelson shared sensitive government information and economic details with Epstein during his time in office, prompting a police investigation into misconduct, intensified backlash from MPs across parties, and growing calls for transparency and accountability over the decision. So not only has Keir Starmer done more U-turns than we've seen ever before, but he's under intense pressure at the moment, isn't he? Wouldn't you say?
Well, intense pressure. I think Keir Starmer is just personally unpopular. I mean, the key problem with him, and always has been the case, is that he has no charisma, right? And so all you need to do, you can say, okay, say for Labour, Tony Blair, whatever you thought of him, had charisma. Boris Johnson, the same. When Keir Starmer speaks, he just sounds like a robot. He has no ability to connect with people. And then appointing Mandelson, put aside the Epstein connections, which are just horrifying. This is a guy called the Prince of Darkness. You don't hire the Prince of Darkness to chat to the US on your behalf. In 1998, when I was a child and you guys were young, he got forced into his first government resignation, a secret loan of, 370 grand from his ministerial colleague.
When was this, 1998?
1998, right?
I was 30, mate. Never mind.
You were 30. You were 30.
Still young, mate. Still young.
Yeah. But this is the point, right? He got fired for the first time in the late 1990s. When like 1997, like Blair, things can only get better. Like you'll remember, right? That's when he first got fired. And how many more times has he been fired? Why would you hire him back? And the only reason I can think is that he's got dirt on Starmer. There's no other reason why you would ever do that.
I think Starmer took him out there because that just made it easier for Mandelson, because he was going to be closer to Epstein Island in the US than he was here.
Yes, and then the other thing you could possibly make a connection to is that Mandelson, Epstein, and Trump are all best buddies. But, maybe going a step too far there, but hey ho.
Yeah. Whether best buddies or just involved doesn't really matter.
Okay,
But anyway,
and then
Starmer's toast.
He is toast, yeah. And then we obviously talked last week about the Fed governor, Kevin Warsh, as the next Fed Reserve chair, signaling his desire for a Fed more aligned with his priorities on interest rates and economic policy. And then obviously the pick is now heading for Senate confirmation, I guess. So did you also see that Trump joked about suing his own chair nominee, Warsh, if he doesn't deliver on lowering interest rates, highlighting the intense pressure he's putting on the Fed to act in line with his economic agenda?
Yeah, I think the thing is, obviously the markets went euphoric briefly because we didn't get Besant, but Walsh is, it's really tricky because on the one hand, he's historically been relatively hawkish, and he was one of those lone voices in the prior to the global financial crisis, talking about and post talking about the risks of like low interest rates and quantitative easing. But on the other hand, would Trump have appointed him if he didn't want to have interest rate cuts? And Walsh has spent the past year before he was appointed saying we're going to do rate cuts, we're going to do rate cuts. And yet, so basically the big problem that you have, and part of the reason why there's so much volatility in the markets, is that nobody actually knows what Walsh as Fed chair is going to do. Is he going to go back to his historical hawkish roots? Or is he going to do what Trump wants and cuts? Is he going to follow the politics or follow the economics? Inflation is still relatively elevated in the United States, as it is across the rest of Australia's central bank actually just raised rates as well. Kind of on this side of the pond, we haven't really paid attention to that. My perspective potentially is that Trump knows he needs an independent Fed to shore up the dollar, and he needs someone who will be independent. And so you can appoint Walsh who can do the things like keeping rates higher that Trump can, complain about, but is doing what needs to be done. So basically a straw man to say, oh, the economy's not going well, it's because of the Fed chair, rather than himself. But I guess we'll see. This is the big thing nobody actually knows. Okay? And hence up and down go the shares, the stocks, the bonds, the crypto.
It seems to be that the guy that is at the center of all of this is your man Druckenmiller, who's involved with GMET, because he seems to be sort of Besant and this Kevin guy are almost.
They're both Kevins. They're both Kevins.
Prodigies of him.
Yeah.
And Druckenmiller is very, very well connected with Trump as well. The circle is round. Of this there is no doubt. I think there's no doubt interest rates in the US, in my view, are going to be slashed. We're going to move forward to we will manufacture and create our way out of this problem. That's what they're trying to do.
Yes, it is. If you look at the tariffs, right? The purpose of the tariffs, obviously, pretend to make money, put VAT on products effectively in the US, but it makes producing stuff, manufacturing stuff in the US more competitive. If you pair that with a weaker dollar that makes exports cheaper, then you might get a manufacturing boom. Or you sacrifice the world's global reserve currency and you don't get the manufacturing boom because even with that, it's still too expensive to build in the US.
Yeah,
one of the two.
You got companies like John Deere who basically I think have been making all their stuff in China, and then they've now come back one factory in Ohio and another one somewhere else. There's many examples of it. I was listening to a podcast about it where US businesses especially are basically saying we can't make it somewhere else and then tariff it back in because it doesn't make any sense anymore. So I think his policy is working. And it's not just a case of getting the tariffs. The tariffs are going to maybe short-term help. But in the long term, he's looking for a manufacturing base back in the USA. And I think that is a wise move, but it's going to be very painful, I think, for the US.
Yeah, 100%. It's going to be very... And I think if you actually look at the jobs report and the recent jobs, we're looking at kind of record numbers since the financial crisis in terms of jobs not being created or jobs being lost for January.
There
are warning signs.
Yeah, sorry. The other point that I was explained in that podcast that I was listening to was that every US president that's tried to do this has been assassinated.
Yeah. Well, I think it's Trump, has survived already one assassination attempt. I think for not just that, but various reasons, it would not surprise me if another one comes around at some point.
Yeah.
America is so divided, and there's so many guns in that country, and not everybody has great mental health. So you put those three things together, it is a tinderbox at the moment. Is what it feels like.
Yeah.
Yeah. On
Okay.
that scary note.
That cheery note, yeah, let's move on to our first guest this week. We're joined by Andrea Cattaneo, CEO of Zenith Energy. Andrea, welcome back. Great to have you back on the roast. How's things?
Very good. Thank you.
Absolutely, yeah. So last time you were on, Andrea, we spent quite a bit of time talking about the arbitration and legacy issues around the business. Today, though, we'll want to focus on what Zenith is building operationally. So you've announced some major progress recently, expanding your Italian solar portfolio to over 120 megawatts, moving projects towards ready to build and securing regulatory milestones on Italy's largest known uranium deposits. Taken together, this looks like a company assembling a serious portfolio of strategic energy assets. So, Andrea, just to start off, can you talk us through how you see these projects fitting together and why you believe this portfolio has the potential to create long-term value for shareholders?
Certainly. So first of all, we have decided to move on and to move away from oil and gas, as oil and gas, except Norway and UK, is mainly in overseas country, which they may repeat the damage that we suffer in Tunisia, for which we have made an extraordinary effort to take a larger recompensation, which you have already described. And the future is something that is in the perimeter of Europe and UK and EU, where there are plenty of opportunities for energy different from oil and gas, which are the solar, the aeolic, and the uranium. So we have two of these three activity, and why not in future to look at the third one? The solar is a very steady business and a very proportionally easy business because the amount of irradiation that there is in certain part of Europe is very strong and steady. There can be days of rain, but then all over the year, the days of rain are even lesser than before. And there is a process, for example, in Sicily of desertification, so a lot of sunshine. And then the point is that there are countries in the belt of the south of Europe that they all present a very good legal protection and a very good legal behavior, but with some differences. So first, starting from east, Greece is not very much suitable because there are too many hilly situation and very little flat land, and the solar need plain where you can put the panel in continuity in the same direction. Then the second is France, where it's much higher in the geography. And then just to give you the difference between, for example, Milan and Sicily, Milan has 40% less than Sicily as sunshine. Some people think, oh, sunny Italy, but it's not sunny scientifically all over the same way. And so 40% is a big difference. Then we have France that is much higher, as you said, geographically, and the other bureaucracy that is more complicated. Spain, where solar has made a tremendous success, and making this tremendous success has become then overbuilt. So at the moment there is such a success of solar that we have some consequences we will describe. And then Portugal, that is a smaller market. So I think that Italy is the market of choice, especially because we have done electricity in Italy since 2015. So we have 10 years of experience with the electricity market and Enel, which is a state authority for electricity. And so we are already quite competent about that. The only thing is to produce it by solar panel. We have made a quite, I believe, a special choice to be only in 3 clusters, so not spread around the country, but only in 3 clusters, one in the north, which is our most important one, which is the province of Alessandria in Piedmont, a place of plain and flat land and a lot of irradiation of sunshine, despite being the north. Then we have a center location in a cluster around Rome, 45 minutes from Rome, in the province of Rieti. And then we have a cluster, only one cluster in the south, which is the region of Puglia. The factor of this cluster are mainly to have something that becomes sexy for the buyers, for the utility, buying properties continuously. We have to remember that in Italy, the amount of photovoltaic that energy is only between 12 and 14%. So it's still, in respect of the mix of energy of the country, growing, but still a modest amount. So solar park are welcome in Italy, and there is an appetite for have them more.
Sure. And when you look at these solar clusters in, as you say, Piedmont, Puglia, and Lazio, alongside those historic uranium assets in Lombardy, what do you see as the biggest opportunity over the next 2 to 3 years? Is it scale, monetization, or building recurring revenue?
Is a mix of the last two. So the fact that we have selected our property with the key question first on the appetite of others to buy it permit us to dispose strategically of 50% of our portfolio when is arrived at the RTB value. This will have a great impact, we believe, in the perception of our investors, which they will see that not only is real, which obviously it is, but as well is something that can create cash immediately. And so that is an exceptional, what you call in accounting, extraordinary profit. And this extraordinary profit will reflect in the annual or the semi-annual account through as well press releases. And then this will permit a success of our perception of liquidity company, liquidity rich company, which is always a case when you have a big value like the 573 million of arbitration, which are not immediately spendable. Okay, so they are a great capital gain, but a few months to come as award and then to be liquidated. So I think that it's always important for a company to have different color in the balance sheet, something producing cash rapidly, something being a very important asset, but maybe more long-term. For example, the case of the uranium, which is a very hot mineral in the international market for two reasons. First, that people understand that the fossil are not dislodged by aeolic and photovoltaic. And so the mix in the world of fossil produced energy is still above 70%. In certain countries, 80% globally. And so that means that the battle to reduce the fossil emission is lost if something new, completely new and heavy in size come in the mix. And so just to give an example, this is so well understood now by specialists that the promoter of the referendum in Italy of 1987 against nuclear, today the same man, not because he has age, but because he sees the reality, is the promoter of the referendum pro-nuclear, because he says the only way to really give a kick and reduce fossil to a minority, 10, 20% of the world energy mix, is only having strong production in addition to aeolic and solar, which is not growing fast at all, in nuclear. And so nuclear needs nuclear fuel, which is the uranium. The second point is that the uranium being produced in few places, proportionally in tiny quantity, in terms of tons, number of tons, the number of tons of uranium worldwide is a fraction of the other minerals that you talk about. It's not a rare earth, but it's not as well a common mineral. This mineral is produced by places where may not want to sell it to Europe. So what if is the case will happen for the nuclear station in UK, the nuclear station in France, which are 17, and then the growing number in Sweden, in Italy, of government which think to reopen the nuclear station or to build a new nuclear station, but they have as well to make sure that the production of nuclear fuel is there and ready, stable, because you cannot stop and go a nuclear site. No, it's not a car that you can put in the garage because you don't have gasoline. You have to keep it running. And the accident of Orano in the mix of France, Orano is a state-owned entity of France, which secure a very big mine of uranium in Niger. So they were very relaxed. They put a lot of money, billions, and then they put their general manager. But then one night there was a coup d'etat, and the new junta, military junta, put the general manager of the French government in prison, where he lies still today, and then pick up the uranium, and instead of delivering to the owner, which is the French government, they sell it to Russia. This was a scandal that appeared in the papers in the last 15 days. So just to tell you how uranium is expensive but special minerals, this uranium is already in Russia because using the Antonov plane, which is quite, everybody knows it, a quite big transport jet, they could transport it all in 2 months. So it means that they made a few trips, but that is something, the uranium, that can be transported easily because it's not a massive quantity of soil, of minerals, no? But is a refined, more expensive, but a smaller quantity. So I know about it because I have written a book that has been published in 2023, in which a big part of the book is about uranium. And so then I became accustomed to the uranium technique. And so when this mine became available, I was very keen to apply for it and to get them.
Well, yeah, I mean, uranium as a commodity is doing incredibly well in 2026, which is not surprising at all to anyone who's following the space. And it is quite funny with nuclear. Obviously, there's concerns around nuclear power and the reason why Germany shut all its reactors down, and it's probably regretting that now. But on these licenses that we have, we're looking at final licenses in mid-2026. How long would it take for a JORC compliant resource to be estimated that investors can kind of bank on, do you think?
Well, I think that we could have, we consider that the two major quantitative certificates, the Australian and the Canadian. But we are a Canadian company, as you know, and so we are familiar with the individuals set in Canada, in places like Calgary, which is our base, Edmonton, which is the capital of our province, Alberta, are places where there are a lot of institute making the certification 43101, which is the national instrument of Canada for mining. So we hope to get that certainly in 2026, if not in the first part of 2026.
Oh, good. So go with 43101 rather than JORC. But obviously they're in terms of reliability pretty much identical, I would say.
Yes.
Yeah.
Right.
And then I'm guessing, because it's such a large resource, are you already engaging with potential offtake partners or strategic investors? Given there's already existing infrastructure, could a mining company
more the second, to engage with the strategical partners is something that we are doing at present with a lot of care, moving our feet prudently, because we don't want to upset some power engaging with another power, because the strategical investors, they are not an insurance company or a big portfolio manager, states. And so then if we'll give a big chunk of Zenith shares or a similar instrument, we'll discuss in a second, to somebody that is then antagonistic to another power, we will antagonize somebody else. So we are as well host of the Republic of Italy for this activity. And so we should be creating no problem for the amicability of the potential investor. So we are moving fast. At the same time, we are having instead a lot of interest by mining investor, as steel uranium is a mineral, although an energy mineral. And so we can have in the future, especially if we decide to spin off our uranium activity in a subsidiary of Zenith, which will have more success in making the market understanding the great value that we have under our belly, because we should remember that we have minerals ascertained in our two mines, valued already at the spot price of uranium today watt, which is calculated in pound being the weight measurement,
Yes,
imperial
LBS.
measurement. And that makes our deposit, which are not certified, but they were absolutely ascertained by very serious builders of the mine, of 1,150,000,000 circa of dollars. So we have a tremendous amount of value under the belly in our activity in uranium, which is not reflected in the market price yet.
No, not at all. But then I think potentially it will become a lot more reflected when those final licenses come through. On the solar pipeline, so we're looking at 110.5 megawatt. That was valued in December at 27.5 million euros. And again, that's not being reflected either. How much of it is close to ready to build status?
Well, now we have, with the last announcement of 3 days ago, has reached 120.5, and so it's growing steadily.
It's growing even further. Yeah.
Yes, it's growing even further. We have said that we target an amount of 200 mega by the end of 2026. You have to imagine that is like a thermometer, is growing gently every day, going towards summer, no? And from spring to summer, let's say. And at the moment, we have the ownership of all the land, and we have the notarized deed for this ownership. We have the application for all the connections, which is the most important thing, is obviously is to have the connection with Enel or with the sister Terna, because if you don't have a connection, you don't sell the electricity. And then the permission application that have been all being lodged. And so that is a process that is daily progressing, no? And so the first declaration of RTB, I think, can be in the summer. We can have 3 or 4 fields that are RTB. At that moment, we can decide to sell it or to build it. I think that will be more impressive even for the investor that we build them, in a way to see the real things in picture and videos, and the real asset, and then to know how much, which is much more money, we will these 200 mega produce in income when they are all fully built. As the journey is long and expensive, we may decide on the journey to sell some of these properties to somebody else.
Yeah, and that's the thing, isn't it? It's difficult potentially because you're going to, acquire new projects, planning to sell some stakes to others, and it's that capital allocation priority. Maybe quite tricky to deal with.
Well, it's important as well because in the long term, solar does a mass of money for 20, 30 years. In the short term, is not producing the excitement that the arbitration or the uranium can give. And so then we have to balance, because if we raise money by issuing shares, somebody may say, well, you issue shares for something basic like building a solar park. There is not sufficient excitement for that, and you dilute the incredible hit of the arbitration. So then we have to be balanced and to do with prudence choice. There is plenty of debt available for solar, especially at the moment of construction. So we should refer to it as a primary source of financing for our solar park project.
It's funny. When I was living in Italy for a couple of years, and a phrase I kept hearing quite a lot of the time was "Ci va piano, va sano e va lontano," and
Absolutely.
it seems to apply to Zenith fairly well.
Yes,
Would you agree?
Yes. Well, there is one of our mantra, "Chi va piano, va sano, va lontano." At the same time, especially for solar, at the same time, for our history of corporate history, we have done as well some stings, some hits, no? Because we have done the acquisition of Medoil in 2012, which frame all our activity in gas and electricity of the following 10 years. If you remember, at that time, we were paid to take a portfolio, the portfolio of Medoil, which was supposedly becoming a liability soon after. This is the reason for which we paid the compensation. But in reality, has been producing wealth since and has given us an extra bonus as the negative consideration. So this acquisition in Tunisia, despite the fact that then we have been sequestrated, has been quite a hit as well, because we went to Tunisia with the risk of COVID, and then we bought properties at the very initial modest price. Then we had to invest on them, with the result of having at Christmas 1,000 barrels net of production under our belt and a lot of oil in the port. So we have done as well some hits which are due to speed and the sense of opportunity, but generally we consider to be a quite steady long-term producer.
And then the last question for me on the solar, I mean, the fault before I hand back to Phil. That Puglia construction was targeted for June 2026. Is that on track still?
Yes, of course. As I said, early summer, yes.
Yes, excellent. So it all seems to be going very much according to plan. And then finally, we talked about the uranium, talked about the solar. I don't want to dig too deep into the legals, but I think it is worth asking. It seems to me that April 2026, so 2 months from now, is crunch time for the court cases. And I think that a lot of investors are looking at we're coming hopefully to the end of what's been quite a frustrating period that hopefully will come with a good outcome. What do you think?
Well, the exceed has a peculiarity that is a public case, and so there will be a lot of information about the process being delivered in the website exceed.worldbank.org. And so I always suggest investors to follow it. It's a very full of information. At the same time, obviously, in this information, they don't have a color. It doesn't say that like in a boxing match that one is winning against the other. So the award in October or in its whereabouts will be the result of the story. But obviously, they will see our comments, they will see our faces, and then they will see the development of our, for example, acquisition path. If we are very confident to win something, we can become more aggressive in making new acquisition of new companies.
Yeah, I think it's a very interesting listening to your question, Charles. But yeah, I think Andrea, obviously the first time you've been on the roast, as in the main Sunday roast. So the one question we've got, and we ask all our guests, is what is the perfect Sunday roast in the Cattaneo household?
Sunday roast in terms of food?
Yes, absolutely.
Well, the point is that I try to keep very fit. And I should say that there is not much roast in my menu, but more raw fish and pasta.
Very good.
A Mediterranean menu.
Mediterranean menu, fantastic. And also being, you mentioned Piedmont region, and I know that region very well. The wine from that region, the Barolo and the Nebbiolo, is absolutely fantastic, isn't it? Do you have a small glass of that?
Absolutely. And I should say that we should make a parallel between Nebbiolo and the stock price of Zenith, because the Nebbiolo prices are very undervalued. If you respect the quality that there is in the Nebbiolo wine, which is totally parallel, very near to the quality of Barolo's. Only Barolo is a brand, and Nebbiolo is less of a brand, is fantastic, good value wine for your Sunday roast.
I tell you, I think sometimes if you wander around Italy, you just come across a vineyard or someone's home or like a little restaurant, and sometimes I'll have a bottle of wine for 9-10 euros, and it's the best wine you've ever tasted, and then you never find it again.
Yeah,
it's amazing. Yes, Italy has the quality of eating, if not quality of life, that is in west of Europe the most dramatic money for value opportunity.
Yeah, it's all about the aperitivos, isn't it, out there? So we'll say Andrea Cattaneo, CEO of Zenith Energy, thanks very much for appearing back on the podcast.
Looking forward to the next one.
Cheers. So let's move on to our next guest. We're joined now by Carl Smithson, Chief Executive Officer and Executive Director, and Mike Murphy, Executive Director and Chief Strategy Officer at Hamak Strategy Limited. Welcome to the Roast, gents.
Yeah, morning. Morning, Kevin and Phil.
Thank you very much. Welcome to both.
Yeah, absolutely. So Hamak is a really interesting story in the small cap space right now, combining traditional gold exploration in West Africa with a digital asset treasury strategy that includes both Bitcoin and physical gold. You've had a busy start to 2026, progressing due diligence on the 250,000 ounce Akoko project in Ghana, regaining 100% control of the Nimba project in Liberia at zero cost, and continuing to build a hybrid treasury of physical gold and Bitcoin. So, Carl, to kick us off, can you walk us through what the last few months have looked like for Hamak and why you think this strategy gives the company a differentiated edge in the market?
Yeah, if I just take a step back just a little bit, just bear with me. We founded Hamak Gold as it was at the time in 2022, listed it on the Standard board, with the aim of sort of pursuing exploration for gold projects, exploration projects, more advanced projects in West Africa, but really starting off in Liberia, where we basically co-founded the company with still our largest shareholder. So fast forward to mid last year, the new team come on board with Mike included, where we wanted to really accelerate on two aspects now. Obviously pursue the gold exploration, but look at a Bitcoin treasury policy as well on the side. And that's what we've done over the last 6 months, is try to move the business forward in that perspective. Now, looking at doing new deals in West Africa, as you point out, in Akoko, but obviously pursuing existing projects that we have, and trying to find new things here and there in the region, which is really where my background comes from. I'm a geologist. I'm 20, 30 years in Africa, 20 years in West Africa. So I know the area very, very well, Kevin. So the last, let's say, 2 months or so, we've acquired this option on the Akoko project in Ghana, as you rightly say. I was there early in January doing our sort of legal and title due diligence, which obviously you would need to do if you're going to acquire a project. But also beyond that, looking at doing a sort of, let's say, a 6-month program, which is going to include drilling, assays, and really an economic scoping study, such that perhaps by late summer this year, we'll be in a position to make a commercial decision on whether we want to acquire the project in its totality and actually move it towards the mining phase. And coming on to Liberia, as you rightly point out, we've recouped 100% of the Nimba project, and actually I'm busy bringing in a new joint venture partner to take that one forward. I can't really announce anything in that respect yet, but we're well advanced on the term sheet negotiations. So, it's been a busy kickoff to the year, as you point out, but it's going to get busier, I think.
Absolutely. Yeah. And Mike, can you give us a bit of background as well on yourself regarding, obviously being brought on as Chief Strategy Officer as well, please?
Yeah, of course. I mean, I teamed up with Carl back in the summer of 2025, as he rightly said, to come on board and just help Hamak Gold as it was at the time. I was advisor to the board at that period of time for a few months, and now I've stepped back in as Chief Strategy Officer, as you say, Phil. And the whole thing is obviously the gold is the primary thing of the company with the Bitcoin treasury strategy. And to that end, we've got Tim Franks on board now that you've seen in the announcement last Wednesday, an excellent professional guy, ex-investment banker, very experienced, very knowledgeable, lots of contacts, and been working in crypto for the last 6 years. So he'll be a huge asset to the company in our Bitcoin treasury policy, what we do, and not maybe just the same as other DATs that have been out there. Other people in London haven't really done anything apart from just using Bitcoin as a store of value. We'll be looking at all sorts of things within the treasury in terms of, yield, other things to do with the Bitcoin, obviously, but all within the regulatory framework that we have to work within.
Yeah. I saw you'd also bought some physical gold, which is an interesting one. We've seen gold strike through, almost as high as sort of $5,500 an ounce, which is almost had a parabolic run over the last year. And we've seen obviously the increase in silver as well. So are you two both very much gold conviction guys?
Well, I certainly am. I think it's probably, market got a bit frothy, to be honest with you, Phil, but I think you've got to take a long-term view on this as we do, right? Because, we're not a company that's basically here just for the short term. We're really looking at a long-term strategy. And I think gold, as part of our balance sheet treasury policy, really does sort of complement, if you like, in the sense of the word, in terms of mitigating sort of risk of volatility of Bitcoin. So, if we can, and Mike can talk to this, look at a treasury policy that sort of dips in and out of the market on both of these classic asset classes, then it might be a sensible thing to do to complement also obviously what we're doing on the exploration and development side on what we really meant to do in terms of finding gold projects and bringing them to account in West Africa.
So Carl, tell us just a little bit about what's happened in the last year or two in Nimba in Liberia.
Yeah, so we basically started exploring in Nimba after our IPO. We raised £1 million and really wasn't enough money, and it was a tough gig always to raise money for small caps 2 or 3 years ago in the gold sector. Maybe not so much now, but we started off on the Nimba project because obviously that was our priority. We'd been there, we'd seen the sort of level of activity. It's right adjacent to the 5 million ounce ET gold mine in neighboring Cote d'Ivoire, but held and run by Endeavour, of course. So it's a right geological setting, Kevin. But we saw on the ground a lot of activity, as in local diggers, and we looked at the geology, everything stacked up, and we said, right, that's where we want to be. So I basically did a very quick shares for drilling deal, just 1,500 meters. We gave a drilling company, we had no money, a few shares to pop 3 holes down for us, and we hit immediately a bonanza grade, 20 meters width at 7 grams a ton. In there's 5 meters at 20 grams a ton. I mean, it was a real sort of jackpot hit, and this was just below surface over the digging areas and areas where we'd seen physical gold ourselves. So it was a great discovery point, but as I say, it was really hard to raise money to really advance that project. So we brought in an Australian company to basically last year pursue, the project, do some more geochem sampling, a bit more drilling, and they've, advanced the project over the last 12 months at no cost to us. In fact, they paid us some money and some shares to basically do that work. They've made the strategic decision to basically focus totally on Western Australia. They're an Australian company, so that made sense, and they gave us back our equity in the project, and I'm now using that to say bring in an additional or a new partner to take the project further forward, because we're still a junior small cap, with limited access to funds. We've got to really seek deals and partnerships to basically take projects forward, I believe, at this stage. So that's what Nimba's going to be doing for, let's say, the rest of this year. If I can bring this new partner in successfully, which hopefully we'll be able to announce in the near future, they'll be taking the project forward. We'll be looking at other projects. We'll be looking at a cocoa as well, and see if we can do deals on anything else that really stacks up in terms of adding value to Hamak.
Very good. And your experience in terms of West Africa, and has it been exclusively gold, or you've basically been geologists looking for lots of different minerals?
Yeah, it's been multi-element, but a lot of diamond work up until, let's say, a few years ago. I actually started my career with De Beers in diamonds throughout Africa, right? So, very, very strong on the diamond side of things, but diamonds lost a lot of love in the market these days, of course, and we pivoted to gold a few years ago with Hamak, which I guess was timely. And yeah, I've been sort of stomping West Africa, but primarily Guinea, Sierra Leone, Liberia, and more recently Ghana. Yeah.
So you intend to stay in those areas? You don't think you're going to move outside of that in terms of other places in Africa?
Yeah, I think regionally, West Africa's good. It works, right? And I'm comfortable with West Africa and the risks. I'm very familiar with the risk, of course, having been here for so long. We have looked at projects elsewhere in Africa, southern Central Africa, and even South America, right? But it's just a step too far, I think, for us in terms of our capacity and our, I just sort of bandwidth, if you like, to take projects on much further afield. We kind of, are established to a certain extent in West Africa. We've got a foothold there. We know a lot of people, a lot of contacts, governments, ministers, all that kind of thing, and it just kind of makes sense for us to stay there. There's a lot of opportunity in West Africa, believe you me. I'm actually looking at a second project in Liberia, Western Liberia, at the moment. I'm probably going to do a deal on that, which we'll hopefully announce in the near future. Great project by the looks of it, and these things are available in the right place for us. So no real need to go sort of pairing off to Peru or anywhere else like that, for example. Yeah.
They often say if you do business in the places that then you're more likely to have success. In terms of cocoa, or however you pronounce it, I'm not very good at pronouncing these names. The 250 ounces of gold, is this in any way JORC, or is this just an estimate?
It was the 250,000 ounces was put together by a local, the license holder, basically, Topago Mining. It's a private Ghanaian entity. And that was done to JORC standards at the time. I think this was 2012, I think they declared that. And they've done really nothing on the project since then. They pivoted to lithium and, other things. But, gold's come roaring back, as we know. So I think there's a real opportunity there. We've got the rights to acquire, everything to the tune of about between, let's say, depending on the gold price, between $7 and $10 per ounce of gold, right? It's cheap as chips, right? It's just a no-brainer deal. But, it's not going to come without challenges. What we want to do is confirmatory work, right? So yeah, we're going to do some infill drilling, we're going to do some confirmatory drilling, and maybe some expansion drilling of that. And the beauty about Akoko is most of this resource, Kevin, is sitting in the top, say, 50 to 80 meters from surface down in the oxides, as we call it, right, which is amenable to cheap mining. The stripping ratio, we've looked at pit shells, even at this early stage, the stripping ratio of less than 1, sort of a small scale, in inverted commas, heat leach operation that's going to turn, a lot of cash at this gold price, right? So that's the opportunity. That's the value accretion model that we want to follow on projects like Akoko and others, something that's cheap to access, cheap to acquire, but actually can, deliver some really good cash flow.
Ghana's one of the, I think it's the largest producer in Africa, isn't it, as well? And it's also a relatively safe jurisdiction from what I'm hearing.
Yeah, it's an organized place, right? I mean, I don't know it as well as, say, Liberia and Sierra Leone, and I've worked in the civil wars in these places in the Wild West, right? So it's a completely different setup altogether. Things seem to work there, right? Access, infrastructure, power, water, things like that, which you don't take for granted, or you shouldn't take for granted in this part of the world, but they're there, right? So, I think there's a real opportunity, as I say, for a meaningful low cost operation here. If we can basically do our proper due diligence, we're not going to rush into anything and, be crazy because the gold price is 5,000, everything's like beautiful. It's not, you've got to really look for what the pitfalls and the bear traps can be in these kind of projects. And, hence you do a proper due diligence. It might frustrate shareholders that you're not moving fast enough, for example, but, you don't want to throw money and value away on something that, if ultimately it's not going to work.
So has Akoko got the ability to be expanded from that 250 ounces, you think?
Yeah, because it's kind of two separate license areas, let's say, with some resource on the north and the south, as we call it. So each in their individual right would have a sort of, let's say, a heap leach operation footprint on each, right? However, the sort of expansion beauty of this is that resource is sitting, as I say, in the top oxides primarily. You've got the depth in the sulfides, which has never been drilled out, a few drill holes here and there, which are positive, but we've obviously got the depth extension, but also you've got the along strike extension. They've done, the previous operators did geochem work, which shows that these trends, if you like, of gold in soils run for over 10 kilometers, right? But actually the footprint of these heap leach operations are about 1 kilometer each. 1 kilometer by 150 meters wide by 1 kilometer long. So that's going to be the size of your pit, for example. So yeah, it can go much beyond that. I'm not saying all of that is mineralized, but it's certainly something that we can look at in terms of
it has the potential.
Potential to go much bigger in a resource.
And I mean, in terms of Akoko, you've even on the 250 ounces, you've got $1.25 billion of value around. Now, quite it's not worth that, but even at $100 or $200 an ounce, in ground valuation, which I think is pretty reasonable at this moment in time, that will give you 50 million valuation in terms of that project. I think people are going to have to start waking up to the fact that these gold projects are worth a lot of money. Now, obviously, it's hassle to get it out the ground, but ultimately, they're worth a lot of money. So, anyway, I'll come to you now, Mike. Tell me more about why you set this company up in the first place. What is your 5-10 year vision in terms of, gold projects, treasuries? What are we trying to achieve here?
I think we're trying to achieve just what Carl says, keep looking at the projects, keep working on the projects we've got. We're obviously always open to new projects that we can do, especially in the areas that Carl said. With the Treasury, working alongside Tim and looking at what we can do with the Bitcoin Treasury function. At the end of the day, with cash, obviously, you lose your purchasing power over time. Bitcoin, obviously, short-term volatility, but long-term, I say, we think it's, adaptability. So, we're not sort of looking at Treasury as a back office, but more of an asset for the company. And that's what I'll be working with Tim to achieve over the longer term, really.
So we have to ask the question because Bitcoin's fallen off a cliff, obviously, in the week.
Yeah.
And it would be remiss of us not to say, well, really, is Bitcoin the right asset? So what makes you believe longer term, like Bitcoin has a place in this business and any business?
Well, I still believe in, obviously, the scarcity value of Bitcoin in terms of how many there is out there. I also believe, obviously, now, certainly in the States, the adoption through the institutional players, etc., for Bitcoin is taking, faster pace. And, from what I hear, most portfolio managers over there are sort of talking about having, sort of certainly cryptos, if it's not just Bitcoin, maybe Ethereum, as part of their treasury policy and basically 10% of their portfolios. So, I still think it's here to stay, but you're always going to get this short-term volatility. Bitcoin's notoriously, throughout its history, had ups and downs of these sort of magnitude over the past few years. So
Yeah. Michael Saylor summed it up, didn't he? I don't know if you saw Michael Saylor yesterday at Strategy. He just tweeted or put on X, HODL, hodl, hold on for dear life. You know, that's what the phrase that these Bitcoin maxes use, isn't it?
Yeah. But do you think in some way, I mean, we've just had the same situation with silver and to a much lesser degree gold. I mean, do you think that the institutions are actually smashing the living daylights out of these assets because they're actually non-government based, non-fiat based assets that they all want a piece of because they know where it's going?
Yeah, I think naturally there's been some profit taking, right? When you get this sort of parabolic curves you've talked about, people are obviously going to take money off the table. But, you know, you look at the fundamentals of, I won't say silver, I'm not really a silver fundy, but on gold, right? Just what's happening in the world right now, you know, the central bank buying, trying to sort of move away from the US dominance of dollar, you know, that kind of thing. So I don't think that's going to stop anytime soon. You know, it's ultimately going to support the gold price. I'm not saying we're going to go to 6, 7, 8,000 or whatever, but you know, I think there's more limited downside than there is potential for upside.
You're not allowed on this podcast, Carl, because we think it's going to 6, 7, 8, 9, 10,000.
There you go. I just hold my feet to the fire. Yeah, why not?
We certainly hope so.
You know, from my perspective, I think gold for sure is a limited resource, whether we like it or not, just the same as Bitcoin. Silver's a completely different scenario. It's become unobtainable. There just isn't any, and the basically the U.S. government, or not U.S. government, the U.S. institutions have been caught with their trousers down basically, and they've got to manipulate it, and that's what they've done. But I think you're going to see much higher silver prices. I think you're going to see much higher gold prices as well, because fundamentally the US dollar is being depreciated without doubt. I mean, it's intentional. It's not to do it for any other reason. It's to make the US great again, if you like. So the dollar is able to be done or used all over the world in a much more efficient way. So, yeah. So I think you're right in the middle of where you need to be. The gold is the key. And from that, then obviously you've got the treasuries in terms of physical gold, which I think is a great move. And obviously the Bitcoin. Now, as we said before you came on, mate, are you quite happy you didn't buy a load of Bitcoin last summer?
Yes, of course. Obviously, whether by luck or design, we didn't. I mean, as you know, in our treasury, we've only got 23 Bitcoin at the moment, but who knows when we might add to that.
Yeah, exactly. I mean, this is going to become a very good opportunity. Now,
absolutely.
What is your thoughts? I mean, here we are. Hamak Strategy is worth about £5 million as we speak at the minute, based on the assets that you've got in Okoko and Nimba, the Bitcoin that you hold, the gold that you hold. I presume you hold some cash still. How's it?
Yes, we do. Yeah.
Is this cheap, or are we okay?
But we would say this, but obviously exceedingly cheap. Yeah, I mean, it's a very, very good opportunity for people. Whether they want to take that opportunity is obviously up to them. But you know, Carl's made a very good case on the gold, obviously. Like I say, we're strengthening the board with Tim and Steve, you know, and maybe some more appointments to come in the future. Great advisory board we've got at the moment. I'm in constant dialogue with Laffer and his advisors and Brittany, etc. So
for anybody who doesn't know, the Laffer curve that we know of, which basically I think assumes that the higher the tax goes, the less tax you take, was his invention effectively. So
it was.
He realizes that high tax does not get you more money; it gets you less money. So anybody who isn't aware of that Laffer curve, have a Google of it or have a AI of it, and you'll see. And the gentleman who is on your board is basically advising you on those things as well. So that's got to be a positive, just from a PR perspective. Never mind the fact he's probably a very smart guy in terms of attracting attention and capital your way. What do you say about that?
Yeah, I completely agree. You know, he's a very, very interesting guy, very intelligent guy. As you know, we had a lunch with him back in October of last year. Very eloquent speaker, you know, lots of conviction about his ideas. And without doubt, it can, attract attention. And, you know, with our strategy as well, you know, we went into the States probably too early last summer. And we're looking to fix that now. And we'll be looking for some traction in the States in the very near future.
Yeah, well, you're on the OTC as well, yeah?
Yeah.
We are indeed, yeah, but we haven't made the most of that, to be fair. But we've got plans in place to rectify that and move forward.
And I apologize, but I forget the name of the lady who's also involved in the board.
Yeah, Brittany Kaiser.
Brittany Kaiser, who has got quite a reputation in the UK as a go-getter, and also is quite heavily involved, I think, in pensions as well, because that was one of the...
No, that's sorry, you're talking about on our board is Nicola Horlick.
Nicola.
Yeah.
So, yeah, it was Nicola.
Yeah, known as the superwoman of the 80s and 90s.
That's right. Okay, sorry. It was Nicola who was thinking of. So, I mean, that is something that if there is adoption of Bitcoin, ultimately, a lot of these companies aren't going to want to hold direct Bitcoin. They're going to want to hold something that has an indication to gold and Bitcoin. And I think you're going to be perfectly sort of positioned for that, hopefully.
Yeah, absolutely. I mean, at the end of the day, like I say, we are differentiated from a lot of the DATs out there in London, and that we have got a true, good operational company behind the Bitcoin treasury policy in the gold. A lot of these companies out there don't have that. They're just relying on holding Bitcoin, and that's it. So
you telling me web design is not a proper business?
No, mentioning no names.
Okay. Well, guys, I think that's a good recap of where we're at. You're starting on a new adventure now, really, after sort of, I wouldn't go so far as to say it's a false start, but not the start that you anticipate. But maybe, you're in a position that is much better than if you had started a while back, mainly because of the Bitcoin. And obviously, we've got a much higher gold price as well. So everything, is hopefully in your favor in that situation. So we will speak to you on other occasions, I think, in a lot more detail on both sides of things, on the treasury and with yourself, Carl. Yep. The more specifics of the gold and the assets and how those projects actually work. And maybe even get to visit some of them. Let's see. Never been to Ghana.
Yep, lovely.
We have to ask you, you're on the Sunday roast. What is the best Sunday roast in the Carl and Mike household?
Go on, Carl.
Well, I'm a freak for a barbecue, so I'd like to take a roast something and stick it on the barbecue and roast it. Yeah, come what may. I even do my Christmas turkey on the barbecue. How about that?
Wow. Whereabouts do you live?
I'm in Yorkshire, in the Peak District, but I'm...
I thought you were going to tell me Ghana there for a minute.
No.
I thought you were going to say South Africa, proper braai and everything like that. But
I'm in South Africa right now. I've got the Indaba lined up next week, right? But I lived here for quite some years, so yeah, I'm a braai man, yeah.
That's
I'm
right.
not in Sheffield, Carl, for a barbecue, though, are you?
Say again?
I'm not sure you get a lot of days that you can have a barbecue in Sheffield.
I'm 24/7, Mike. Come on, mate.
Is it one of those fantastic ceramic, those big egg ones that you have?
No, I'm not that Larny. No, it's just a good old Weber. Yeah.
Good old Weber. Yeah, good Weber. Yeah. Nice.
And on that note, Carl, also, I'll be seeing you next week. I'm in Indaba, and you're one of the people who are presenting at the Mount Nelson presentation doing on Wednesday. So I look forward to meeting you in person then, and we'll go a bit more detail in terms of the assets. So, Carl, what is it? Mike, what is it for you?
A roast lamb for me. Good old roast lamb, lots of roast potatoes, Yorkshire puddings, and a few veg with lots of northern gravy.
Man after my own heart. And some mint sauce or not?
Oh, absolutely. Yeah.
The more vinegar, the better, I think, is the way to go. And a Yorkshire pud or not? Oh,
yeah, absolutely. Homemade Yorkshire puds.
There you go.
And if you can't buy them homemade, Iceland sells.
Oh, Bessie.
No, you really are lowering the tone. I'm going to sign you out again. I'll say Carl Smithson and Mike Murphy of Hamak Strategy. Thanks very much for appearing on the podcast.
Cheers,
Thanks, guys. Thanks a lot.
Okay, let's have a look at some of the movers and shakers. The best performer I get on SharePad is Ormond Mining. Aquis listed up some 85%. I think that's just one that's moved on a few trades that have come through because there's not been a significant news update I can find. The next one is IMC. Exploration up 70% after they secured a 9-year renewal of the mining license for the Karaberd gold and silver mine in Armenia, extending operations until January 2035 through its wholly owned subsidiary ASAT LLC. The renewed license allows underground mining of up to 30,000 tons of ore per year and permits extraction of up to 1,274 kilograms of gold and 2,310 kilograms of silver. So, yeah, good news. Moved up, as I say, 70%. We talked to IMC back in the day, didn't we, Kev, at one of the mining conventions? But what
yeah,
do you
the one at Christmas. Yeah, it was all about gold then, and it's now about gold, isn't it? What was the country that it was in? I'm trying to remember.
So they've got Armenia, and they've also got projects in Ireland as well.
Yeah, it was the Armenian guy that we spoke to, if you remember, and he had the gold project. So, yeah, I haven't looked into it, so I'm commenting totally off the top of my head. But obviously, on performance, it looks it's probably extremely cheap, isn't it? Market cap as we speak.
Yeah, and
13 million. Yeah.
Yeah. And then who said companies can't raise cash at the moment? We saw obviously Tungsten West successfully raising £41.37 million through a placing and subscription to fund the restart of production at its Hemerdon tungsten and tin mine in Devon. The company issued around 222 million shares at 18 pence, raising 10.8 million from institution and existing investors and 29.3 million from a major international investor, with the fundraise more than 2.5 times oversubscribed, reflecting strong demand. So great to see that. Stocks up about 45% on the week. We've been saying it's only a matter of time before it goes. Comments?
They didn't give me any. I went on the raise, and both institutional and private, and they gave me zero.
Yeah, I got zero as well. Yeah,
Charles got zero as well. There you go.
Yeah, well,
so
I think
that tells you is that the market is going to have a lot of people who might want to buy in. I'm not going to buy in, I'm afraid, but I think it could do very, very well for me.
I just think the placing price was, for me, surprising because it was so attractive at that price point. You kind of thought, if you take the placing, you're going to be basically in profit immediately. So no wonder why it was scaled back. So even though it's such a large amount of money raised, the idea that none of us got into it kind of suggests that they don't run a very tight book, which is good news. But again,
I think institutions have been given that money, and even in the retail, I think it's probably gone to either existing shareholders or the guys with the biggest pockets.
Yeah. I do, but the thing is with Tungsten West is the same thing, which is that it's a mile and a half from the edge of Plimpton. So even if you get all of this money into the company, and they've tried to restart that mine so many times.
Yeah.
Again,
what do you think of the challenges, Charles? Because when they first listed, I was talking to Kev about this earlier. They listed around 80 pence something there with 120 million shares or something like that. We give them a market cap of ours, let's say 150 million, and they're currently around 222. What are the challenges that they're facing with that mine? Like, is it about the mine planning? Is it about the whole design of it that's a challenge?
Well, it's the planning, it's the design, and I'm it's
there'll be a few houses full.
Well, there's that, right, and I think though that over a significant period of time that's become significantly better, and what they're planning to do has become a lot more attractive. But ultimately, the problem that you have, in my mind, is that you're a mile and a half from the edge of Plimpton, which is on the edge of Exeter. So you want to 50, 100 trucks a day going down that tiny road. You want to have ground tremors. Even if there aren't tremors, people are going to feel them because that's what people are like. Noise pollution, dust pollution.
Blasting.
Is it a hard rock? You've got to blow up the rock at the end of the day. That's what mining is. This is why, if you're out in Nevada, great. Or if you're in the depths of Cornwall, then generally you'll be fine, even if it's very deep. If you're right next to a major population center, then it's different. On the other hand, right, there is no denying it. This is a tier 1 asset, one of the best tungsten assets in the world. No denying it at all. Now, I'm in Exeter. I'm very close to it geographically. So basically, and this is the thing. You need to the company needs to communicate because this mine has tried to start up many times under different names over the past couple of decades. The companies communicate how are they going to actually, forget the money for a second. They've got the money. How are they actually going to start mining this stuff without being shut down in the first 5 minutes by locals who hate it being open? That's it. That for me. And in like China or Indonesia, or even Australia, locals would never get it closed. But we're in the UK, and how it goes here. One person complains to the council. So I grew up on a farm, right? I grew up on a farm, and on my uncle's farm, actually, in Gloucestershire. And people in the village started complaining of the farming noise, even though that farm has been there for hundreds of years. He eventually gave up and moved to Scotland. And this is, so if you can't get a farm going in the rural Gloucestershire without complaints, how are you going to get a mine going right next to the city centre of Plymouth outside of wartime? And I'm not saying they can't at all. I just want to hear what technology
it's a challenge. It's a challenge.
Yeah, exactly.
Challenge, yeah. Okay, shakers of the week. MILA Resources dropped some 35%. Reported results from the maiden diamond drilling program at the Yarrell Gold Project in Queensland, confirming the continuity of gold-bearing structures from surface to depth of around 230 to 300 meters, with grades of up to around 5 to 6.8 grams per ton of gold recorded at depth, although high-grade intercepts were less consistent than in shallow zones. So drilling validated the scale of a mineralized system, extended mineralization beyond the historic resource area, and improved understanding of the structural controls on gold. Based on the results, MILA will now prioritize shallow, capital-efficient targets along strike across the Yarrell, Monell, and the Mount Steadman licenses, targeting multiple prospects to 150 meters depth. So the company remains fully funded and focused on building a portfolio of shallow resources to support future development. Why do we think it's dropped back 35%, Charles?
Well, I just think the grades weren't any good. As simple as that. And and this is not their fault, by the way. This is the name of the game. You literally do just need to go drill and get your results back. And if it doesn't come back as you expect or as you hope for, then the share price is going to fall. And there's nobody's fault. You know, they had good targets. It just didn't work out that way. What I will say for MILA, though, is back in the day of the lithium boom, they had a joint venture with Limetown looking for lithium.
Yeah.
Lithium price is starting to recover. The Australian, the ASX lithium producers are all starting to do much better than they were a few months ago. That tenure is still very, very good for lithium. MILA's market cap is only, 7 million or so. So if the lithium boom comes back, I'd watch out for another joint venture coming down the track. That might not be tomorrow or next week, but sort of a few months down the line, I think it's very possible.
Yeah. Well, you wrote recently about Ethereum as well. They've got that thing that they had where Rio walked away in Rwanda as well in terms of the lithium. It's not that that's a bad project. Just wasn't big enough for them, you know.
Yeah, but I think the difference with Ethereum, Rio entered the country for them, and it would have had to be a massive tier 1 deposit in order to justify building something, you know, Rio would want to build. With MILA, for example, there's so much infrastructure and plants and processing capacity there that if it was like a reasonable sized deposit, it wouldn't need to be tier 1 because you already have all the capex and all the plants built. But yeah, I don't know, just something to keep an eye on. Yeah.
Okay. SWC down 25%. I guess no surprise there. We've seen quite a sharp drop in the price of Bitcoin over the last few sessions. Certainly $30,000 drop in the last week. And yeah, I mean, quite a few of these. I think somebody said that Strategy has got something like $36 billion worth of Bitcoin, but is trading well under that. What are your thoughts on some of the treasuries now, Charles?
Don't say anything, Charles. You're not allowed to.
Oh, I'm not allowed to speak, you know. I'm not allowed to be I'm not allowed to recommend any of them as investments, but generically I would say that when it comes to Bitcoin, if you understand the technology and you believe in the thesis, then the whole purpose of it is you need to buy it and hold it and just accumulate. And the problem with the treasury companies have is that they tend to be able to raise capital more easily the higher the Bitcoin price goes and harder the lower the Bitcoin price goes, which is the opposite of share investing, right? You want to buy shares when they're low and sell them when they're high. Smarter Web Company, for example, or Strategy, they're all kind of in the same place where Bitcoin is falling. So it's hard for them to raise capital, but this is actually the best time they should be buying it when it's falling, not when it's above 100K. Or even at 120 or 126, as some of them might have been buying. Something that we talked about just generically a lot with these companies, and we kind of repeated multiple times, is that in order to retain that Bitcoin on your balance sheet and not have to sell them during a bear market or when it crashes, as it has done, is you need to have an underlying business that can keep all of your working capital costs covered. So you can retain those Bitcoin
I know
on
one
balance
company
sheet.
I know one company that has a web design business, I think.
Oh, do you? Well, this is the thing, right? Yes, but are the management paid $500,000 a year? Would be
No, only 400,000.
Oh, that's all right then. But no,
Yeah.
I think this is the thing, right? We all kind of know generically inflation has happened. Yeah, you can get it a little bit cheaper, but realistically, you need around $1 million a year to cover salaries and legal costs and nomads and whatever else to stay listed. So as long as you have an operating business generating a profit of $1 million a year, you don't have to sell any of your Bitcoin. You can just wait for it to come back.
Yeah.
What I would say with a lot of these treasuries, specifically in the UK, and I won't name them, many of them have warrants, which means that they're not good deals to buy in at the moment. Many of them have debt service agreements that need to be paid off. However, if you look at when those warrants are going to expire, or when that debt is going to get paid off, you might find even once that happens, I suspect there'll be plenty of treasuries with some way more value in their Bitcoin treasury than their market caps when that happens, just because sentiment is so low. So it's worth keeping an eye and tracking that stuff. But
Yeah,
just my
absolutely.
thoughts.
What's your thoughts generically on Bitcoin? If I asked you to give me a price prediction in 12 months' time, what will Bitcoin be worth?
I think this is the problem. You don't know. One thing that, again, generically, just my personal view, and not any clients, is that the Bitcoin narrative was always that it was digital gold, right? That it would act as a inflation hedge, as a risk hedge. That when everything crashed, Bitcoin would stay relatively static, and that's just proven not to be the case. It's being buffeted by institutional inflows, by the fact that you can say there's 21 million coins to trade, but actually there's a massive paper market on top of that. That kind of like silver and gold is kind of distorting the price. The fact that you had a Trump presidency come in and it shot up and now it's come back down again. The fact that, for example, Amazon dropped throughout the day 15% yesterday. It's acting more like a high beta Nasdaq leverage trade, rather and so if you have the problem is that people think, okay, well, if we have like interest rate cuts at the Federal Reserve later on this year, then Bitcoin will surge again. But those rate cuts might only be happening because we have inflation, because of recession concerns. When there's a recession, Bitcoin doesn't do well. On the other hand, you might find, okay, well, if the interest rates stay flat, then Bitcoin, what's it going to do? Well, we don't know. It's been volatile massively. What if interest rates go up? You'd imagine Bitcoin would go down, but then maybe it won't because everything's all over the place. So basically, we don't know. And anyone who's saying I 100% know,
that was a magnificent. I have no idea answer.
But I think he's right. I mean, it's funny because I was looking at this and I sent an article from X, and I think I was wanted your comment, but you've just summed it up, Charles. Was that he said that the moment supply can be synthetically created, the scarcity is gone, and the original Bitcoin thesis is broken. The framework died the moment Wall Street layered this on top of the chain with cash-settled futures, perpetual swaps, options, ETFs, prime broker lending, wrap BTC, total return swaps. And from that point forward, Bitcoin supply became theoretically infinite, not on chain, but in price discovery, which is what actually matters. So I think the moment you start leveraging it and using it in those sort of derivatives, then effectively the supply is infinite, right?
Well, yes and no, because the same as the gold and silver markets, there is only going to be 21 million Bitcoin, and there is only ever going to be so much gold or silver physically at a time, right?
Yeah.
And so you can have a paper market that distorts, the paper price of Bitcoin. But I think this is just a general lesson in leverage and wealth building. If you're going to use leverage to trade, go nuts. That 100% up to you. But you'll notice that people who just own Bitcoin in a cold wallet still own their Bitcoin and didn't blow up. They've lost kind of paper value in dollar terms, but they still own the Bitcoin. The same with the gold, the same for silver. If you physically own the physical items, your actual wealth hasn't changed. It's changed in dollar terms. But at some point, there will be no more Bitcoin to mine.
Yeah, but the difference is you can't ask for the Bitcoin to be delivered in reality. Well, the Bitcoin is still a digital asset. So please send my Bitcoin in the post doesn't exist.
Well, it sort of does. There's only they're limited. There's only 21 million.
Yeah, no,
I know they're digital. Yeah,
I'm with you, but when you take it to the paper level and it expands the ability, just like it did in silver and gold. Well, silver and gold, that can be called, and that is going to be called in March. I think we're going to have an absolute tsunami in March with 1.5 billion ounces of silver, especially, that could be asked for delivery. Even a smidgen percentage of that is going to destroy the COMEX and the LME or whatever it's called.
Well, I'll tell you what I think the end game for silver, not the end game, but what I think is next for silver and gold. Well, they've called it relatively well so far. They're going to pump the miners, specifically in silver. They're going to get all of the whole marketing machine is going to say, go buy silver miners to get that leverage and take the pressure off physical. That's what my view is going to be. Because it makes sense. All the money will go into mining because they like the leverage, and obviously leverage blows up. And then the pressure on actually getting the physical silver will fall.
Yeah, but I think that's not going to work. But I accept what you're saying.
Well, they tried everything else, haven't they? So.
Well, that's right. Now it hasn't worked. this I mean, an arbitrage of like $35 now is bananas, really, when you think about it. I mean, and I know you did write your bananas article, so
well, I think
that was a good reference to that.
It's really simple, right? If you could take physical delivery on the COMEX and then ship it to Shanghai, then you would, and you would make $35, but or say $30 after costs and shipping.
Yeah.
But that arbitrage isn't closing, and all that tells you is that you can't actually get the physical stuff, so the squeeze isn't over. When the arbitrage, I will say this though, Kev, if the arbitrage does close completely, right, or within a couple of dollars, then the trade is over. I think that's something you have to accept. But as long as it's still open,
it
has to go higher.
But then that doesn't become a trade. In my view, it becomes a long-term hold, because the reality is there still isn't enough silver.
No.
For the reality of it. Anyway, this week you wrote an article on Delta Gold Technology, so just give us a bit of a recap on that.
Yeah, so Delta Gold obviously had a significant share price gain since the IPO, done really, really well. And I think there's no escaping from the fact that this is a high risk investment. But having said that, they have a research agreement with the University of Toronto, which is one of the world's top quantum physics labs. I mean, the general idea is they're researching whether nanoscale gold, so this is gold particles measured in the billionths of a meter, possess properties that could solve quantum computing's challenge, which is creating stable, scalable qubits. And if they succeed and they're able to outlicense that, then the potential returns are just astronomical. And there has been, out of various universities in the US, decent research that suggests that it is possible. But basically, if the basic problem you have with quantum computing is the classical computers, so what we're using right now, you process informations in ones and zeros, in bits, and a qubit can exist in multiple states simultaneously. If you can do that, then the processing power you create, is world changing, both in a good way, but also potentially in a very scary way. But qubits are just unstable. They have to operate at like basically freezing temperatures, and even then they lose their state within milliseconds. And the idea is that if you can apply nanoscale gold to quantum computing, you could create a stable environment for the qubits to be in, have a stable quantum computer, and then the breakthrough would be the equivalent of the dot-com boom, the internet, artificial intelligence, possibly greater. But again, it's very early stage, and we await news from the company on what research they found so far.
So one of the things that people have been saying about Delta Gold is that it's a win or bust situation, and I wanted to pick your brain on that, because for me, what they're actually creating in terms of the college, university, campus thesis, which they've put into their program, to actually create this system around the world where they have these places, and then they attain the IP from this. My view is that could be worth hundreds of millions of dollars on its own if they don't actually find anything and take it to the next level, because the big boys are spending billions on this, and they will want to know and have that intellect behind them. That's my view. I think it can win without finding anything.
I guess we'll see. I think it's a case of I think possibly the most important thing to understand is that science, and if you're a biotech investor, you'll know this, is that clinical trials, for example, often people say, oh, they failed or it didn't work, but it's often the case that you found out something interesting for the next trial.
Yeah.
Or you had a drug and it didn't work particularly well for what you were targeting, but actually you noticed as a side effect it did something better for something else. Yeah. This is the same, right? You might find that you don't crack quantum. The idea of Delta Gold completely cracking quantum computing, if they did that, then we'd all be billionaires tomorrow. But they probably won't crack it. If they find something that advances the quantum computing case by a fraction of a %, then it can still do extraordinarily well.
Well, that's what Oxford Bio did, didn't they? And it went for $1 billion. Yeah. So I mean, I'm not that worried about the finding stuff. What I feel is that they're effectively, if we use the mining analogy, they're creating a mining network of how do we mine the intellects of the experts of quantum computing in the world, and They're fully intending to expand that from Toronto to more places. And as that happens, I think, the value is just going to keep building and building and building. I can't see how somebody isn't going to say, "Ooh, I want a piece of that." And even if they don't take it all, they're going to want a piece of it, and they're going to have to pay a lot more for it.
We shall see. We shall see.
We shall see.
Okay.
As one of my picks and is doing quite well. Let's say, even though with all this instability, our picks are doing pretty well this year so far, guys. So we've got at least 4 or 5, maybe more, that are up more than 50% already, which is tremendous. Delta Gold being one of them.
Very good. Charles, anything else you want to talk about? United Oil and Gas, I believe, had a good move in the last sort of few sessions. Do you want to say anything on that?
Yeah, sure. Well, there's a couple that I think I'd highlight for the next couple of weeks. The United Oil and Gas, the ship is out there. The piston coring is happening. If the piston core is successful, and then Calibri, the flagship target.
The what?
The
what?
The ship. The ship.
Piston what?
Piston coring. They're piston coring for oil.
Piston something else there for a second. I was like, what?
Anyway, if the children could settle down.
Yeah.
The piston coring is starting. If it comes back successful, then you put your odds of chance of success of a successful drill up to 1 in 3 at Calibri off the offshore Jamaica. That's pretty much the best you're going to get for frontier exploration. Brian's already been very clear that a drill would cost around $50 million. So if you look at the market cap of UOG, any kind of earning on a $50 million drill, that could happen potentially in 2027, and it will just go bananas. Obviously, the piston coring has to be successful, and you have to secure that joint venture earning. But I think on the risk-reward profile, it's a great bet. And just in general, guys, we kind of know how this all works out. Is the FOMO, the market anticipation of the piston coring potentially being successful. We've seen it with 1,000 oil and gas plays. We'll see with share price appreciate as it has already, and probably more in the run-up to results.
So take your money off the table before the results come. Or
no, well, I think it's manage your own risk. You're the only one who lives with the risk. But then on the flip side of it, if you think about it, if it's successful and a joint venture gets secured, and then they go and they drill, do you want to sell your shares for pennies when you could have become a millionaire off it? And I know that sounds very rampy, but it's binary success.
No, but
it's the name of the game.
This is the game we play, isn't it? This is the game we play. Yeah. One of the games that is being played at the minute, which I really like, and I was speaking with Gary, the CEO of Valerium this week, just had a quick chat with him, is that this whole tokenization, the fact is they're worth £58 million at the minute. They're going to go on to either NASDAQ or New York Stock Exchange. They went up to nearly 20p, down now, I think, around 12p. But they have assets in the company now worth, I think, at least 3 times the current market cap. And they basically looks like they're going to be RTOing onto the NASDAQ. And I think that short term is going to do extremely well. I think it could 2 or 3 back from here.
I'll tell you, I put two more that I just want to highlight for next week. For the traders out there, but I'm a fan of long-term investing, but I know people like trade ideas. So one would be Defense Holdings. The new CEO who's just come on board is top tier, and I would imagine, but not, you can never be sure that announcement is a precluder before a contract announcement. It just makes sense. This is how things work. So keep an eye on that. The share price is still fairly low compared to what it was. So that could be a decent idea. And then the other one is Helix Exploration. We've been waiting on production there for a while. Clearly, there's been a few teething issues. But I think that when that production RNS comes out, that's going to be a good move as well. And I think it'll be soon. So those 2, plus UOG, those 3 for next week.
What about my view also, just one last one, just to throw it into the pile for next week, is actually Extract Resources after that announcement this week. In terms of Charles' got his baseball bat out now, so I'm getting a bit worried. Extract Resources, huge volume after the announcement of them starting production at Silver King within the next 3 months. And it looks like the antimony is probably going to follow it in the next, say, 6 months. There has been a whole load of churn because of the huge raise that they did, £2 million in terms of the market cap at 0.6. That is coming to an end. And I think that share price is going to appreciate pretty fast over the next, say, 4 to 8 weeks, because it's way too cheap for what it is at the minute.
I think it's yeah. I mean, this is kind of underappreciated. Like when I do an article, we do an interview, and there's a huge amount of volume, and the share price goes up a bit, and then it comes back down. Long-term investors should realize, a lot of what's happening is shares are moving from people who just bought in cheap and want to flip it to people who want to hold it for a long term. And so with Extract, I think as well. I mean, the timeline Colin has put on it is in my mind very ambitious. So there's people who are thinking, oh, this may not happen this quickly, but if it does happen that quickly, it will re-rate very, very fast. So we will see.
Okay, very good. Let's have a look at some sports. We saw the start of the Six Nations last night, Thursday the 5th. Yeah, France versus Ireland. France beating Ireland 36-14 at the Stade de France. And then obviously we've got England, Wales and Italy versus Scotland this weekend. That all looks shaping up to be a good one. England, I think, coming off the back of 11-game winning streak. So yeah, it should be interesting to see how they perform. Football wise, Premiership, well, in the Carabao Cup this week we saw Arsenal. We're going to see the final with Arsenal versus City after their wins against Chelsea and Newcastle respectively. And then in the Premiership we saw some pretty good results in the week, didn't we, Kev? We saw Man U beating Fulham 3-2, obviously Spurs and City drawing, which was good to see City drop some points, and then Liverpool beating Newcastle 4-1, and then Arsenal with a excellent win against Leeds 4-0. So thoughts on that, Kev?
Manchester City destroyed Newcastle, didn't they? Arsenal, Chelsea was a bore draw. And Arsenal, Man City, it could be Carabao Cup, could be the precursor to the race for the league as well. I think it's likely it's going to be the two of them. Yeah, let's see what happens. Premier League, 14 games left. Manchester United have actually got a team, or seems like they've got a team. I hate to say it, but I picked Fernandez in my fantasy league team. I don't know why I did it, but I just think he's going to score points. So
yeah, he's a good player. And then we've got Tottenham as well. Early kickoff, 12:30 on Saturday.
Well, that's one of the reasons why I picked him, because there's going to be goals, isn't it? Tottenham got a leaky defence.
I mean, and then you've got the big game is Liverpool City. That's going to be. I'm hoping for a draw. Come on, 0-0 bore draw on that one, so we can both drop points.
I'm going to be in Cape Town watching that before the Indaba. So we need to win. We desperately need to win. But who knows? It actually could be a very exciting game, because I don't think either team's defenses are particularly good. Though City's has become a little bit better since they got Gay. I'm very disappointed, actually. Man City signed both Gay and Semenyo, because I wanted them both. And obviously Gay was coming in the summer, and then like literally the last second the rug got pulled. So that was disappointing. So
very good.
Indeed.
Okay, I think
my last words, we've been talking on and on and on about resources now for how long, Charles? 3+ years. And now
more, but
now our time is coming. Even though things have gone up a reasonable amount already, it's only just begun, because there is so little capital that's been employed in this area of the market. I was listening to a thing, and it was basically saying at the median, normally 4% of equities are resource mining based, and it's still 1% or less.
Yeah, you got to be careful with that though, because things like the internet, technology, artificial intelligence has been created since those stats were relevant back in the 70s or 80s. But there's still a huge amount of volume of capital that can move into this space. Just huge amounts of capital.
Even if it went from 1 to 2%, Charles, what would happen?
Well, exactly, indeed. I mean, one really important thing that I think is worth touching on before we sign off is gold hit 5,600. What was silver at? What did silver eventually get?
121 was the highest.
121. Yeah. Copper, went kind of ballistic and is still kind of good. Tungsten is doing crazy because there just isn't any. But and I know oil's come up a bit as well. But I think the key point is that if you had spoken to the miners a couple of years ago and said you're going to have, $4,500 gold even, or $50 silver even, They'd be over the moon and making just ridiculous amounts of money. And the share prices still haven't even caught up to that. So if silver settles around 70, 80, and I think it will go higher, then you're still
that's why people like Rick
money.
are putting into silver producers, because their earnings are, once they report their earnings, they're still on around $25 to $30 silver. Then there's more upside in it, isn't there, than holding physical?
Well, there's way more upside, but again, this is why the minor pump is going to happen. It'll take the pressure off the physical for a while to let some of the shorts exit. But the I think possibly the only, I don't give advice on this podcast and I'm not allowed to, but the only thing I would say is to manage your risk, but also manage your greed. When the bull run starts in metals, it runs for a long time and you make a hell of a lot of money. However, when it ends, it can end quite violently as well. And that could be 2 or 3 years away. So there is nothing
something
wrong.
Off the table.
Yeah, 100%. 100%. If you've got into a stock and you've done a 20x on it, and you're not taking anything off the table, and to be fair, I'm going against my own advice several. But
you need to chastise yourself.
You just basically you can't. If it then comes back down, you can't complain, right? You can't whine. But
Look, if you've 10 bagged of stock and not at least taken your initial money off, then I think you're insane, personally. Right?
And on that bombshell.
That bombshell will say, Charles Archer, thanks very much for appearing, Charles. Always great to get your insights. And if you do like what you've heard, please do subscribe, hit the bell icon for further notifications of future episodes, and have a great weekend all. Thanks for listening.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.